really excited to have representatives from Madison Point Capital and 25 Madison, which is, I guess, under the same umbrella firm, recent rebrand. But Rebekah and Jaja, maybe we can start by if you can introduce yourself, a little bit about your background, because I always think that's helpful to know where people are coming from. And then we're going to go into kind of both sides of the investing and incubating side. So Rebekah, do you want to start with just a little intro of yourself?
Sounds great. Nice to meet you all. Thank you for joining us, and thank you to Foley for hosting. My name is Rebekah Foster. I'm a director at 25M Health. I, thought I was going to be a doctor when I grew up, and so have had a background in healthcare throughout my career, but have veered off course, as may be obvious by my sitting here tonight. I did a lot of undergraduate research in medical decision-making that informed my career choice to leverage data analytics to impact population health versus treat patients one at a time. And so I started my career at Analysis Group here in New York in their health economics and outcomes research consulting practice, largely supporting pharma and life sciences companies with their post-marketing commitments after drugs are approved. And then from there, I went on to Flatiron Health in its early days, which is a healthcare startup also based here in New York that leverages real-world electronic health record data to accelerate new drug approvals and label expansions in the oncology space. I joined Flatiron around the time of our Series B and was there through our acquisition by Roche, and left in about 2020 for business school, and have been at 25M Health ever since. We are a joint venture studio in partnership with LifePoint Health and Scion Health, part of the broader 25 Madison venture platform, which includes several verticalized industry-specific venture studios, as well as a seed stage venture fund that Jaja can tell you a little bit more about. We both incubate new companies from the ground up in partnership with entrepreneurs and residents, and we also do early stage investing. So we're a bit unique in the sense that I'm splitting my time across building new companies from zero and also investing. We build and invest in close partnership with our health system partners, and we have a business development and investing team as well as a functional team. So we provide all of the resources you need to build a new company from scratch through our team, from product engineering, brand, UX, UI, et cetera. So looking forward to tonight.
Great. Jaja, you want to give a little intro on yourself?
Yeah, so thanks for being here, everyone. I am essentially Rebekah's counterpart on the fun side of things. And so my background is I also was going to go to med school. So I was a biology major in college. And after college, I went out to SF, worked at Google, was on the AdMob team there. And after a few years, I went to Clover Health when it was a late stage startup, about 300 people there. And then I went on to join Headline out in San Francisco. They're a large VC fund doing like Series A's and B's and onwards. So I was there for almost 4 years. And in 2022, I joined 25 Madison. At the time, 25 Madison was doing primarily and basically only incubations. And they wanted somebody to come on board and do straight up investing and just direct investments into companies. So that was 2 years ago. Fast forward to this year, about a month ago, we decided to essentially separate the investing and the incubating part. And so now the investing portion is now called Madison Point Capital. Still same sector, same stage that we were doing before, pre-seed and seed, and B2B SaaS, healthcare, and fintech, but just more separated and branded differently from the rest of the incubation studios. So that's me.
Okay, great. So let's start with you, Jaja, on the investing side. So I think most people are more familiar with the venture investing side, but I do want to dive in a little bit on that. So maybe at the highest level, could you tell us maybe what sectors are you investing in, what stages, what amounts, how many investments, just to give a little bit framing to your work?
Yeah, so we're investing basically at the first or second institutional round. So pre-seed and seed is what we call it, but there's obviously a lot of nomenclature. I would just characterize us as pre-Series A investors. Our average check size is about $1 million. It flexes from 500K up to $2-3 million even, but on average, I would say it comes out to around $1 million. And the sectors that we're investing in, B2B SaaS, healthcare, and also some fintech. I would say, I think that's about 90% of what we're looking at. There's obviously some opportunistic stuff that comes up, but just think of us as generalist, app layer, B2B.
Right. And what role do you specifically play in that process? I want to talk about the process in a second, but what role do you play and what role do other people at your firm play that founders might interact with Madison Point Capital?
So I'm on the investment team, and I think that is the most primary interaction that founders will have is just with somebody on the investment team. There's also, we have like investor relations. We also have people on back office like accounting. We have general counsel like Tiana. And so I would say as a founder, you probably don't spend much time interfacing with the rest of the non-investment team folks. I mean, occasionally I think, maybe like IR, or the general counsel asks you some questions, but I would say the primary interface is always going to be with the investment team.
And on the investment team, you have, associates and partners. How would you describe their different roles as founders see different titles? And obviously there's title inflation, different firms have different roles, but how would you generally characterize that?
Yeah. So it really depends on firm to firm, but generally you'll have like analysts, associates, VPs, principals, partners. And I think that everyone sources, at least here at Madison Point, and I would say at a lot of smaller and mid-sized firms, like everyone is always sourcing, is always looking for new deals. I think that at really large, like multi-stage firms, some of the more senior like GPs like probably just aren't sourcing. At least that's been like my experience. But I think sourcing is like that engine that keeps the VC fund running. It's like the most important thing I would say to a VC firm is
and
like
just to clarify, sourcing is just finding deals, finding companies to invest in.
Yeah, correct. Like without sourcing, we're nothing. So that's like the most important part.
Great. Maybe you can walk us through, from your perspective, what a typical fundraising process looks like. And the reason I ask this is many of you are founders looking to raise capital, but most of you haven't spent time on the other side investing in companies. And oftentimes there could be a lot of misinformation about what that looks like from the other side. And I tend to think the more exposure you get to what an investor goes through, the more you can navigate that process. So maybe, Jaja, you can just take us through like what, not with a very specific example, but just like typically like those interactions and how quickly or slowly it'll go.
I'll give you the most typical like timeline. So usually what happens is you'll have a first call. This call will be with, it could be with anyone on the investment team. It could be with an associate, it could be with a partner. It just really depends on the firm, but it's usually there's some kind of first screening call. I would say this is normally about 30-minute Zoom call. That seems to be like the norm now in this post-COVID era. It's like a 30-minute Zoom call. It's pretty much, you introduce yourself and then you go into the pitch. You may use the deck, you may not use the deck, depends on what people prefer. That's considered just like a first call. What usually happens after this first call is that the person who took this call, let's say it was an associate. They take this notes from the first call and the deck usually. They talk about it at some kind of weekly deal flow meeting. And the weekly deal flow meeting is where everyone on the investment team meets up and talks about what they're looking at, what they're excited about, what they're not excited about. And usually there's some kind of a conversation about this company. And after that deal flow meeting, usually what happens is the associate will say, okay, I want a partner on my team who, is much more experienced than me or whatever, and, can help me diligence this company further. So what happens is you will probably get an email for a second meeting. And so the second meeting is usually going to be 2 people or 3 people, depending on the firm. The first call person will join, and let's say this associate brings along their partner. They'll also join the call. This is usually kind of a repetitive call, to be honest. It's just introducing yourself again and talking through the deck again, story again. In this situation, usually, hopefully, they're asking a bit deeper, more sophisticated questions. I can't always promise this happens, this depends on the firm. But they do like a 30-minute, call, and then afterwards the two people debrief and they say, okay, this is actually really interesting. What we're going to do here is do some work on our end. And I'll break it down between like early stage and growth stage because it means very different things between early and growth. So if you're, let's say, a seed company, what this usually means is that they're going to, let's say you're in the, I don't know, biotech or life science space or like healthcare space. They're going to go find an expert in their network who is specifically focused, who knows a lot about this specific vertical. So let's say you're starting a maternal health company. They're going to go and talk to gynecologists, OBGYNs. They're going to talk to founders in your portfolio who have some kind of a background that's similar. So it might be another founder in the fintech space in their portfolio who they can just quickly like ask and get some feedback. It could be somebody who is a close co-investor who they know is on the board of XYZ large company in the fintech or OBGYN space. So that's kind of what they mean by we're going to do work is they talk to a lot of people about what you're doing. On the later stage side of things, this usually comes down to like a more formalized data room, and they'll look at cohorts and financials. And so and they will also do like calls and talk to folks in their network, but that is more focused on like the data. And so it's a little bit different, but I assume most people here are probably like earlier stage founders. So you'll be in like the former category that I was talking about. So expect, your deck and the notes from your calls to be shared with like a lot of people in their networks. And let's say they come back pretty positive and they're like, okay, we are, pretty decently excited. We've done our calls. We've done like, 5 calls in this space and we feel good about where we're at. Usually what happens is you come in and then you'll pitch the entire investment team. This is usually referred to as the investment committee or investment team meeting. And basically you do what you did again in the first 2 meetings, but usually it's a longer form. It's like about an hour because there are more people on this call. People will ask more questions. Everyone on the team usually has seen some kind of a investment memo or investment deck that they have written up about you that was sent around internally. So people have a lot more context. And basically after this meeting, the entire team deliberates and they figure out it's a yes, no, or sometimes, and oftentimes they'll say, we need to do more work. Like, somebody on the investment team will say, how about, did you consider XYZ? And so they'll go and do scramble and do a call and figure out XYZ. So that's usually what is happening, how the sausage is made. And hopefully at the end you get a term sheet.
How long does that process take?
Few weeks. I
Few
would
weeks.
say like,
Yeah, quick.
yeah, 3 to 4 weeks.
Got it.
Yeah.
So I want to come back to that later
Yeah.
because I think I want to get your perspective later about what you do if you're not getting the callbacks. But Rebekah, just moving over to you about incubating startups, maybe we can hear from you. What is that process like? Because it's a very different way to start a company. Can you walk through some of the mechanics of it?
Yeah, so we're doing a lot of the steps that Jaja just walked through, but as investors or incubators. So a lot of that early new co-validation, new company validation is being done by our internal team. So just in the way that you all spend time, doing ideation from 0 to 1 and coming up with your new company idea and validating it with experts and coming up with hypotheses, testing those hypotheses and ultimately generating this deck that you go out and present to investors at the pre-seed stage. We are doing the work that gets you to that pre-seed stage internally. So we kind of generate our own version of an investment memo, but it's an incubation memo. And so after we've brought that incubation memo to our investment committee, really leveraging a lot of the processes that Jaja described, and we get that green light from investment committee, that's typically our pre-seed funding. And at that time, we bring on what we call entrepreneurs in residence to our platform to actually lead these things and become the early founders of these businesses. And so we seed them, very similarly to how you'd seed a pre-seed investment. The difference here is that it's a little bit earlier. I would call it a pre-seed to put a label on it, in the sense that the pre-seed actually comes a bit later. What we do in this interim phase in terms of structuring these deals is bring entrepreneurs and residents on as contract employees. So we'll actually do an external search, focus on a specific subsector that we validated and want to try to incubate in, and hire that person and see them with a salary, the opportunity to bring on a co-founder, so an additional salary, what we call a studio services budget that is kind of my time, product time, engineering time, UX, UI time, all the various services that we provide internally, back office support, etc. And assuming key kind of business validation milestones are met, you'll go as the founder to investment committee to unlock that pre-seed investment. And at that time, you sort of caught up to the process that Jaja is describing. And from there, our involvement as your venture studio partner will gradually ramp down, with our final kind of activity being your externally led seed fundraise, which we won't actually lead. We'll help you bring on an external investor to lead that funding round. And we'll gradually ramp down our involvement from there as you have raised money to build out your own internal team. That's roughly how the process differs from a standard investment.
And how are you finding those entrepreneurs in residence or those founders, where you're just going through like an executive search effectively?
It's certainly venture studio specific. We largely do network-based search, and I spend a lot of my time on hiring. It's one of the most important things I do, as you can imagine, being founders yourselves. It's the most important success metric, especially at the early stage. But some other venture studios do use executive search firms as well.
Got it. And when I think about incubated startups, oftentimes they're talked about as de-risk for the founders, right? Someone's done all the heavy lifting to do the research, but lower equity. Is that a correct characterization, or are there other pros and cons from the founder's perspective of joining an incubated startup?
Yeah, it's certainly de-risk. There is obviously, you're at the pre-seed stage, so there's still, a lot to learn. We've, are giving you functional resources. We're giving you an investment memo. We're certainly giving you a place to start. I think what's the most valuable is really what industry you're building in. So for us, it's obviously healthcare focused, and we have 2 health system partners that we build with. And so, most healthcare startups die trying to acquire their first customer, whether that's a health system, a payer, or a provider. It's an incredibly long sales cycle. It's incredibly expensive. And these large incumbents are not used to working with startups. They don't have a concept of what it means to be pre-product, pre-revenue. They don't really want to build with you. They're familiar with something that's more like Epic, an electronic health record software, which is archaic in nature, but has all of the features that they need on day one. And so I think what's most helpful as a founder building in healthcare is that de-risked health system go-to-market, or whatever venture studio you're looking at. I would understand how they're going to be a go-to-market accelerant as well as a product development accelerant.
Awesome. So let's move into, for the both of you, kind of comparing and contrasting. And the first thing I wanted to touch upon is, are there certain companies, I think, Rebekah, you're starting to say this, are certain companies that would be better for one model versus the other? I think you mentioned one, like, hey, built-in initial customer base where there's a pre-existing relationship, and it might be very difficult to get customers in that. Are there other companies that you two think might be better for one model versus the other, or not, maybe?
I definitely think healthcare is probably the most obvious one, especially if you're coming from a background where you don't have those existing payer relationships or like hospital relationships. I think if you're starting, like, let's say a B2B vertical SaaS, probably you don't need to be part of a studio. Or if you're doing like a dev tool and you're an engineer, it's like, I'm pretty sure you came up with this idea because of your own personal experiences, probably not as well. Or if you're doing something consumer, like, I don't think you necessarily need to find like that much studio expertise. So I would say things like healthcare, supply chain, perhaps, because that also requires you to either have come from super, super deep in that industry and know a lot of people in the space already, or you can leverage the studio who might already have those connectivities.
I would also say it's founder specific in my experience. Perhaps you're a solo, non-technical founder and you want engineering support. That's something that we provide. Perhaps you were a failed first-time founder and you're looking to de-risk yourself in your second kind of go around. And so I would say the spec kind of differs, but those are some characteristics that I've seen that are pretty consistent across our founders.
Great. And that leads into my next question. You're doing a good job leading into my question. Just talking about the founders, like, are there certain types of founders that might be better for one versus the other? I think you mentioned earlier, if you're coming deep from industry and maybe, you weren't thinking about starting a startup, but you could get recruited into that position. But again, are there any differences or types of founders that might be better for one versus the other?
I think that a lot of first-time founders might find being part of a studio really interesting because you get so much more institutional support from day one. I think that people don't realize how lonely it can be when you're starting out by yourself. You have no one to bounce ideas off of, like maybe you have a co-founder. You don't have like a back office, for example. That's also something super helpful that I think a first-time founder might find out very daunting. And you don't have the network, perhaps. So like maybe you didn't start your career in Silicon Valley or New York or something, and you find it just a lot easier to be part of a venture studio's network and leverage the people around you who have been a part of this ecosystem for much longer. I think, yeah, those are maybe types of founders who would enjoy being a part of the studio.
And how about the founder experience itself? I think on the investing side, it might be fairly typical of what people have heard. I thought, Rebekah, it was interesting. You're saying that once you get into raising that seed, you're holding their hand to some extent, but it's really up to them to go raise that. Can you talk a little bit about that, about what that path looks like, especially beyond that stage? How involved are you guys? And similar, Jaja, on your side, like how involved are you all, and what type of interactions do you have beyond that investment?
So when you're an entrepreneur in residence at our venture studio, you come on for a 1-year term. And at that point, you are getting really 50% of my time, 50% of an engineer's time, 50% of product time, 50% of UX UI time. The services you're utilizing in reality depend a little bit on the type of business that you're building, but that's roughly just to give you a sense of how involved we are on a day-to-day basis. So for instance, I'm working with one entrepreneur in residence right now, and we ping on Slack from the morning. We start our days until the end of the day. I'm joining every single meeting. We have daily stand-up, weekly sprints, etc. And we are supporting that entrepreneur in residence with myself, an associate, 2 engineers, etc. And so we're very, very actively involved on a daily basis. We also, as we start to gain conviction, which typically happens around the 6-month mark, we'll start to unlock that pre-seed investment as early as that time horizon and start to help them build out that founding team. And so that's really when our day-to-day starts to decline. So typically what happens is you bring on that engineering resource first. So in this particular example, I helped the founder bring on a head of engineering. So our engineering team was able to kind of free up their time to go on to the next incubation while I'm going to, stay steady as her more kind of strategic and operational support. And so the goal is that by the time you get to that seed fundraise, we've built up a story that someone like Jaja would be, compelled to invest in the sense that we're hitting a lot of the milestones that she described in terms of we have a first customer, we've built out a founding team. And so they should be, armed and ready to go out and do that seed fundraise and find success with an investor, like Jaja or another. And so we're supporting them through that early validation. And then after that seed fundraise, we're still a thought partner. So it typically ramps down to, weekly meetings, but we're still very much lending a hand when they're, fundraising down the line. Maybe they want introductions to Series A investors. Maybe they want help leveraging our network to bring on a hire that's challenging. They want to bring on a new advisor and would love some recommendations, etc. So we never fully disappear. We stay actively involved. But the percentage of our time that we're spending on these businesses does come down pretty dramatically after that seed fundraise.
Got it. And Jaja, for you, how involved are you after the, VCs always say they're involved or they're here to help. How much do you interact with startups with, and in what capacity?
Yeah, it really comes down to how much the founder wants to interact with us. And we really respect that because there's some people who they want to talk every 2 weeks. That's totally fine. Some people want to talk, once every 3-4 months. That's totally fine as well. So I think the cadence is really set by the founder, and it just depends on what you're looking for. We're happy to help support you however much you want to be supported. If you don't think you need that much support, that's also totally fine. I think that if people have specific asks, then yeah, that's totally something that we want to do as much as possible. And so yeah, it just really depends. But I would say on average, probably never go like a few weeks without really talking, especially if we just made an investment.
Got it.
Yeah.
I want to move into some general advice that the two of you have, and we'll do 3 or 4 questions on that, and then we'll open it up to the audience. So if you have questions, keep them in mind. We'll do about 15 minutes of audience Q&A. Just moving into some general advice, for the sectors that you cover, what type of experiences or insights are you looking for the founders that you are investing in or pulling in? Maybe how it might be different for both sides, but what type of experience do you typically want to see?
I can start. I'm really looking for domain expertise, and I think Jaja, gave the example of why a healthcare and a venture studio is a great combination. I think first-time founders in healthcare who don't have domain experience in healthcare just makes it really hard. It's kind of an entirely new vocabulary, a lot of tricky incumbents who are not eager to be sold to by someone that doesn't have industry experience. So the absolute first thing I look for is direct industry experience, and preferably that startup experience, because I think, to me, these are inherently sales jobs, especially at the earliest stages. And if you don't have direct experience selling to your customer and your industry, I think that's incredibly challenging. And so we kind of refer to something called founder market fit. And so when I think about the best performing founder in our portfolio, she's building a nurse scheduling company that's sort of a healthcare IT product. She went to nursing school. She spent time in healthcare consulting, and then she realized she wanted to do clinical work and spent time, working at Memorial Sloan Kettering, getting direct clinical experience. Now she's coming to her position as a founder with both, corporate and clinical healthcare experience, and she can uniquely sell to this buyer, the chief nursing officer, because of her experience. And so her, ability to sell and understand that customer and their unique pain points because she's lived them makes her an excellent salesperson, which has dramatically de-risked her business. And she is, outperforming some of our other companies, I think, especially because of that factor. And so that's really the most important thing that I look for.
Yeah, it has to make sense. Like, why are you doing the thing, or why are you the person to solve this problem?
You have to be uniquely positioned to solve the problem, or have some really compelling reason why you are, if it's not directly domain expertise related. We like to say that you have, proprietary insights based on your work experience.
Great. And Jaja, besides that, because I imagine there's something, it's similar, but is there anything else that you look for or want to see?
So I would say why you and why now, and Rebekah just talked about why you. I think why now is also really important because, there are a lot of great ideas that are too late or too early for their time. And so I think the why is now the moment for you to build this company is really compelling to, and I think any VC who you'll pitch, because they want to know, is there some kind of regulatory change that's happening that's making this business possible today instead of 10 years ago or 10 years from now? Is there an incumbent that's, shutting down, or is there a gap in the market that's going to present itself? Are there maybe geopolitical changes that are making this more possible? What are the tailwinds that are coming around, and perhaps this sector, maybe it's a new sector or new space that wasn't really a thing 5 years ago, and all of a sudden it is. So I think the why now question is really important, and it's really been a make or break for a lot of companies.
Now, for some of the people in the audience who are aspiring founders thinking of doing a startup, what skills do you all recommend people build before they start pursuing their startups or as their early founders?
I think just ask a lot of potential users, why, is this something you're going to pay money to buy? I think that a lot of people will just, they think of an idea And it sounds really great on paper, but when it comes down to like who is gonna wire me money to use the product, I think that's like a really big line that you have to cross. And I think that a lot of people just don't really understand, like, this is the specific wedge feature that is going to make the difference between somebody not paying and somebody paying. And so that is, I think, a piece of advice I would give to you if you especially don't come from like that specific industry or space, and you don't like or like live or breathe this problem in your past job or past life. It's really important to nail that and have clarity on that as early as possible.
Yeah, I would say customer discovery is really the most important thing to spend time on at the early stage. And that by that, I mean, to Jaja's point, an endless number of user interviews to really test, is this a real pain point? And is there willingness to pay for it? Because I think sometimes, and I think both of those questions are equally important, because sometimes it is a real pain point. And I think, to go back to the nursing example, it might be a massive pain point for the chief nursing officer, but that individual doesn't have budget allocated to them. And so that's one persona that you want to validate the pain point against, but then you need to validate, for in this example, the willingness to pay against the CFO. So just making sure that that customer discovery persona set is broad enough that you validate that it's not only a pain point, but that there's willingness to pay and it's recurring, is at the highest level what I would focus on at the earliest stage.
Yeah, one other thing I want to add from a conversation we had before the talk started is you've heard it in this, everything, a lot of what you're doing early on is selling. So you're selling yourself to VCs, you're selling your product to customers, you're selling your vision to potential employees. And that selling really requires storytelling. So a lot of those storytelling skills, some of you come from a sales background, some of you don't. If you don't and you hate it, you got to get used to and get good at it, because so much of what you're doing is selling yourself and your vision, and you'll never get out of it, ever as a founder, but particularly in these early stages. A few more questions here is that maybe on a broader level, what are some interesting innovations that you see out there in the market that are interesting to you, that are not AI related? Okay.
That are not AI related. Let me think. Not AI related. I feel like everything that comes across my desk these days is AI related. I actually don't think that's a bad thing. Because I genuinely do believe that there are use cases for AI that we haven't uncovered yet. And I think that if you're a founder and you're not using AI in your product today, I do really think you're like falling behind, and like you really should consider putting it in, because it's like one of these things where it's not, I don't even think AI is like its own vertical or its own sector. I think that like that's like the wrong way to think about it. I think it's more of, it's just becoming more, it's becoming a norm to put that in any kind of product, any kind of company. Like, even, let's go back to the healthcare example, for example. You don't, even if you're like a services company, you don't think like AI is going to really play a role in the services company, but it could help you guys, schedule better, make appointments more efficient. It could help your providers chart better. And so I think that is definitely, I don't want to say underrated, but people like to make fun of like all of the AI chatter in kind of any industry, but I really do think that it's still underrated, and the like largest changes are still yet to be seen.
What about you, Rebekah?
Yeah, I would, just to pull on that thread a little bit, I completely agree with Jaja about like the adjacencies of AI and accelerating in that way. I think in healthcare, it's been tricky to segment the landscape of AI when you think about care delivery versus everything that happens outside of care delivery, where I think, again, you have to go back to these incumbents, and why it can be really helpful to find a venture fund or a venture studio, or people in your network who have experience selling into these really unique buyers. Because they are not as far along as Jaja and I are, as you all are sitting in this room in terms of being founders and building patient care delivery AI today, I think is a bridge too far. So I think thinking about the more health IT applications of AI, we're invested in something that's focused on regulatory compliance using Gen AI, notes, scheduling, thinking about all of the adjacencies in healthcare that you can apply that. But I think we are too early for these large incumbents to get excited about it in the context of traditional care delivery. And so having a bridge to that over time, it's almost similar in the way I think about the transition from, fee for service to value-based care, where if you're kind of showing me a business that only works in a value-based care environment, I'm probably not going to be terribly excited about it today, given where we are. I kind of feel similarly about AI, where there's got to be some bridge from a health IT application to a direct patient care delivery application.
Great. Last question before we do audience questions. What's the best way for founders to engage you? And Jaja, maybe we'll start with you, which might be more traditional. What's the best way for them to get on your radar or keep in touch as they're going through their building and fundraising processes?
I think that the best way to get in touch is via an intro. It could be a portfolio founder, it could be an operator, it could be just another founder that's not a portfolio founder, it could be an investor. I think that those kinds of introductions are usually the most valuable. Cold email is also totally fine. The problem is I do get a lot of spam these days, to be honest. But I think generally people really like introductions from other folks that they know. Doesn't even have to be someone who's like my best friend. It can just be, honestly, anyone who who I know and have met before and generally thinks highly of you and has met you in some context before. I also think that for keeping in touch specifically, a lot of the times we'll talk to founders. It may not be a fit today for various reasons, but what I like seeing are these update emails that, I know that there's like 50 other VCs on this email, which is totally fine, but I do enjoy reading these and seeing how people are progressing as the months or even years go by. And yeah, people do read these emails. And so honestly, it's totally fine to put me on those emails after we've talked.
Got it. Yeah, and going back to earlier in the talk, if somebody's engaged and they were able to pitch you initially, but they're not hearing back from you, and I don't mean you as in Madison Point Capital, just VCs in general, I tend to give the advice, hey, it's not a go. If they're interested, they're going, they're meeting, they're following up. Just like anything in life, like applying for a job or dating someone, it's like, hey, they're not getting back. It's like not really that excited. But I don't know if you have a different perspective on that, or everyone's got different policies of that, of how quickly they move. But would you say that's true generally, or would you give a different answer to that?
Yeah, I would say that's generally true. If you think about just the day-to-day of what the average VC is dealing with, it's just a lot of pitches. And I think that you have to know going in that, we talk to thousands of companies a year, and I think we're trying to make like 6 investments a year. So the likelihood is really low to begin with. And so, I don't think that people should go in necessarily with like super high expectations, because if you think about just like from a numbers perspective, it probably won't work out, but it could be a great conversation. You might learn something. It could be a connection that is useful down the road. You have no idea. One example I love to give is there was a company that was still licensing back in like 2019 or 2020. And I took this company all the way to IC, so did like a lot of work on it. And we ended up passing. This was at my previous firm. But the founder and I became very good friends. And so I feel like we talk on a weekly basis. And now, he eventually exited his company and he's an angel investor now. And we're very good friends. And we share deal flow and just are general good personal friends. And so you just never know what's going to happen down the line.
And Rebekah, what about you? People want to get on your radar, maybe want to be considered for an opportunity. in the future, what's the best way for them to kind of keep in touch or get your attention?
I would certainly echo the warm email, the warm intro, the cold email, and the investor updates, because just because it's a no now doesn't mean it will not become a yes in the future, to a lot of the points that Jaja made. I would also say, we get a lot of cold emails from founders, and the ones that stand out are really the ones that show why you're a fit for our fund. I know, as Jaja, was saying, it is a numbers game, and you're reaching out to an incredible number of funds because you also have to play the numbers game. But I think you have a much higher hit rate, so to speak, in terms of engagement and getting those first and second calls if you're able to articulate a compelling reason why, as a venture studio partner, we're compelling to you. If you, for instance, are building something that doesn't have a provider go to market, and you send me an email that you really want to become an entrepreneur in residence, and you have this great idea and you're looking for a venture studio partner, it's tough for me to want to spend my time, engaging with a lot of those emails. But if you are able to share in several sentences why you are kind of the perfect strategic fit for our fund, for our venture studio, for whatever reason that might be, I think that goes a long way. And so tailoring those cold emails to your audience, I think, is obviously very time consuming, but will increase your hit rate dramatically. And really understand the fund that you are working with, especially before you get on that first call. Because I think I've seen sometimes just lack of preparation on the founder side ends up wasting time for both parties, because we don't want to waste your time either. And so just making sure that you're communicating that strategic fit in that initial outreach is really important.
Okay, awesome. Let's do some audience questions. Anybody want to start with the question in the back right there?
For Jaja. It's kind of two questions, actually. The simple one is, do you lead investment? The second one is really, how do you think about the notion that you need every portfolio company to be able to return the whole fund?
Notion.
Yeah, there's an idea that you read about online.
Oh, yes.
Maybe just like the venture math.
Okay.
How the venture math works.
It has
Yeah.
unicorn potential as they believe that
Yeah.
they get there somehow.
Yeah.
Right?
So the first question is, do we lead? Yes, we lead. We prefer to lead, actually. But we will follow as well, but we strongly prefer to lead. So to your second question, the whole venture industry is predicated upon, there's like a classic, like out of 10 bets, 1 returns the fund and more, the other 9 go to 0 or like, almost 0. That math does work. And that is the reason why I think that whenever VCs ask you, what's your vision, like long term? And this is a question I also ask on every call. It's like, what does this company become? Like, let's say you are in, this specific space or structure today. How do you think about moving out into adjacent spaces and have this become a multi-billion-dollar company? Because if we have like if we feel like the upside is very limited, I think that people aren't excited to make a bet, because they think that, okay, this potential is capped at 2x or 3x, which is actually okay if you're a growth fund. That's a very different story. But at the seed stage or Series A stage, people are trying to have, fund returners. And so that's why people will ask you that vision question, like, what do you think this becomes?
Question up here, Luke.
First of all, thank you for coming over here and having us. And it's a very insightful information. But I do have a question, because I see there is a clear difference between approach, right? I'm thinking, what's effectively for me the cost? Because I'm trading equity and central control. Is there a clear difference? You guys are giving ventures to the, you might say, is giving a bit more at the beginning in terms of support, connection, etc. Is there a clear cost difference? What you guys are aiming at in terms of the amount of equity, the amount of control over the company?
As a founder, you're definitely making the trade on equity versus risk. And so it's partially, your personal risk tolerance and how much equity you want to give up for, the level of de-risking and support. So we do have different ownership targets, and that's, the fundamental difference from an equity perspective in terms of how these things are structured.
Here.
Thank you very much for your time. My name is Sean. My company was incubated in a startup studio based out of San Francisco. So Rebekah, my question is for you. How many companies are you running at once?
We aim to incubate about 4 companies a year, but they're all at various stages. And so we don't operate in a cohort form. We typically stagger it such that a director and an associate is able to spend about 50% of their time on one, and that our engineers are able to spend about 50% of their time on one. So that's really about internal resourcing that informs that. And as they're at different stages, our level of involvement obviously flexes up and down. So that's how we think about how many we're able to support.
How big is the team?
The team is about 10 people across Nashville and New York. So we've got our functional team sitting down at LifePoint, which is one of our health system partners. We find it's really helpful to have them sitting there building that relationship. And so that's product, engineering, brand, UX, UI, and then our business development team is here in New York.
Nexi.
Why do you strongly prefer to lead? And do you have any thoughts on advisors taking a small percentage of a relatively new startup?
Yes, we prefer to lead because if you look at, let's say, best case scenario, a company we invested in at the seed, has a huge exit, like it's acquired or goes public. We, just like the founders, get diluted every single round. And so at the end of the day, like you want to start as high as possible so that when the exit happens, you own enough of that company to make the fund math work. So that's why. And on the advisor side, I would say that it just depends on, there's like some advisors are quasi mega angels, like some aren't. And I would say that Rebekah, you guys probably deal more with like advisors and setting it up from the beginning, right? Like
We do. So this is a common approach for us, and we do give them small amounts of equity in exchange for being an advisor. I think it's important to incentivize them in a way that's aligned with your incentives as the founding team. But I would really highlight the strategic objectives that you are hoping for them to accomplish. So that's something that we bullet out very formally in their equity agreements. It's performance-based in a lot of cases, something that Tiana helps us a lot with. But that's relatively standard practice, and it wouldn't alarm me so long as there wasn't, an incredible volume of them. There's more skepticism around warrants, which does come up a lot more so around, health systems and other early customers having warrants. That will definitely give you more investor skepticism. But as long as there's a compelling reason why you're bringing on that strategic advisor and they fill a capability gap on your team or have some sort of proprietary network or relationship that you feel is going to uniquely accelerate you, then that is a compelling story to tell that no one should be giving you too much trouble for.
Yes, and did you have a question?
Yes. My question is, now is like a age of generative AIs and LLMs, and specifically you're investing on the application layer. So how do you advise the founders in that stage to build on application layer? Because it's like it's there, looks very exciting, but at the same time, there are like a lot of really stuff to do, rolled by the big guys. So what do you advise there? Or what are you looking for? On application layer?
you mean like the big, like from
For example,
OpenAI?
like, yeah, it can be OpenAI, it can
Yeah.
be Meta, they can just release better LLM,
Yeah.
and then your startup is cost.
Yeah, so I think that at the app layer, a lot of these OpenAI, Google, yeah, they theoretically could release like a competitor to your product. I think that that's an argument that has been made for like decades. It's always like, what if X insert big tech company here does it? And that's a very sound argument, intellectually makes a lot of sense, but in reality, that almost never happens. Like I just think about wasn't a very easy example, like Calendly. I think like a lot of people didn't invest in Calendly because people were like, well, what if Google like Calendar does this? I guess Google Calendar does do it, but like no one uses that feature, right? Like in 2024. So I think that, yeah, that's definitely like something that founders think about a lot, but I think it's definitely a risk that's overplayed.
I actually want to double down on that because I worked at Microsoft, and as a specialist in Microsoft, I had 62 different products to be specialized in. Realistically, right? When we think about now, multiply that by the amount of accounts I have, realistically, the math doesn't make sense. So if your business is locked into one specific line of column that does better work than Microsoft, now you have the ability to deploy on multiple services, whether it's on-prem or hybrid cloud. So yeah, it's big companies don't necessarily mean automatic 100% market share.
All right, let's go over here.
Hi, may I ask you, how do you feel about solo founder?
There we go. Or
You
yeah, I think solo founders, I think a lot of people will advise against. I've seen it work in many situations. I think that it really comes down to if you're a solo founder, what, is basically, are you technical enough to build this product yourself, or are you going, and do you have a good enough network to recruit a good technical team? I think that, solo founders, it can work, and we've seen it work. So I don't think it's like a huge red flag. I know like a lot of VCs will say, I would never invest in a solo founder or something very dramatic like that. But I think that in reality, you guys hear
You
me?
try it now.
You guys hear me?
Press it one more time. I think yeah, try now.
Okay,
Yeah, that's good.
sorry. I think that people just mean that, they want to de-risk the company more by having more people around. But I don't necessarily think it's I would not invest in a company because it was a solo founder.
I think the question too is why. I've seen solo founders who have been multiple times successful, and he has like a founding crew, management team around them. So they're not really a solo founder in the sense that like they couldn't recruit anyone. They are able to, they just are doing it themselves because they've been successful. And if the why, I think oftentimes is like, does this person not have the ability to partner with people or bring in talent or collaborate? And that could be yellow flags. I don't know if Rebekah, you have any other?
I feel the same way. I think the why is really important here. Is it because you haven't fully validated the concept yet and you think it might be a direct to consumer business, or it might be a B2B, of another flavor, and that's going to really inform who you want to bring onto this founding team. So I think it's similar to a lot of the topics we've discussed, where as long as there's a compelling reason for it, it's fine. But I think your ability to recruit and build out a team is something that I'm really looking for when I meet with early stage founders. And so I think you've got to, if you are, really convicted on being a solo founder, find another way to give me confidence that you're going to be able to recruit successfully, because you won't be able to build the whole company by yourself. And so I think that's the watch out that I would encourage you to think about how to de-risk in other ways.
Okay, let's do 2 more questions and then we'll just get into the networking part. Way in the back.
Yeah, so earlier you discussed about, I guess, customer validation or getting feedback. Is there a preference for a deeper level of feedback or a broader level of feedback? So in my case, should I be chasing after one paying pilot program versus reach out to a broader industry to get, testimonials?
I think that I would probably go towards the former. I think that that's a much bigger thing to say, like it's much more, it's just moves the needle a lot more if you can say, I have this one pilot customer and they're willing to pay me X amount. Like that says a lot more than having gone to talk to 50 people and got like kind of service level feedback, in my opinion.
I would tell you though, I think I would start with doing that broad exercise. And if conducting that broad exercise doesn't lead you to a pilot customer that's excited to build with you from day one, I think that's a red flag in and of itself. So I think that's what often surfaces those early pilot customers, where you meet, to go back to the nursing example, a chief nursing officer that's like, I absolutely need this right now. How can I be an early partner here? And if you don't have a conversation like that that informs an early pilot partner, then I think you almost have your answer in and of itself.
Okay, last question right there.
The goes for Rebekah. Do you guys have like a common framework that you use before you're investing or starting any new co? And if so, what is it? Then on the new co CEOs or founders, what's like the qualities that you guys recruit for that, you know, this person's not going to start a business themselves, but they're still going to have the heart and the grit to like do all the nitty gritty of C6.
We have a relatively structured process in terms of discovery, validation, and MVP testing that we kind of take you through. You obviously, you know, will flex according to how validated the idea is internally. If it's your idea coming to us as the venture studio or ours in terms of it being off the shelf and something that we're building together. But we roughly have those 3 stages to get you to have an MVP, you know, product in market by the end of that 1-year term. And we structure the discovery and validation accordingly and have key milestones that we look for you to meet in each bucket. The second part of your question is really what keeps me up at night. I worry sometimes that there is an adverse selection problem, if you will, in terms of recruiting entrepreneurs and residents into venture studios in the sense of exactly what you said, which is, you know, really understanding the why behind why you don't want to go at it alone. And I think there are really compelling reasons why, and we have, you know, I'm working with an absolutely exceptional founder right now who simply did not want to do it alone. She, you know, just wants to have a partner in the room. It's pretty simple. She's got incredible domain expertise, a personal founding story. She doesn't have the confidence to do it on her own. And just having me physically present in meetings, I think gives her the confidence that she needs to do this thing, but didn't have the proprietary network. She only really had the personal pain point to build this business. And so, I mean, it's something that I look to de-risk. It's something that informs our hiring process. It's something that I spend a lot of time trying to deeply understand why you're looking for that venture studio partner. But I think it's a lot of the characteristics we've described. Are you non-technical? Are you looking to build with a tricky incumbent? Were you a failed founder who's really looking for a big success this time? Are you at a different life stage that just you are, you know, excited to trade off, you know, equity for risk, et cetera? I think there are many, many, many compelling reasons, but it is a key watch out in my day-to-day.